Hi everyone, welcome back to my channel. My name is Alvan Su. So something that I want to share with you today because I met a client of mine and what happened was he started investing his money, especially after the pandemic, where there was so much of volatility or the market movement in the sense. So last year in June, by the way, his name is actually Yong He, 永远的和平 in a sense. It's like forever, there will always be peace. I really like his name. That's why I just want to share this story. And I really felt that he is potentially someone like you. Why? Because when you're new to investing, when you're new to trading, right, what's going to happen, especially in the stock market, is you are going to pick the cheapest company or the cheapest company that have just came into the market. And this is what we call by initial public offering, or in short, it's called IPO. But the issue here is that when it comes to investing, I really want you to look at this one thing, which is the probability of the company to succeed in this current environment. Okay, do you know? So there's this article, I'm going to paste it over here, right, to show you. Before 2009, okay, in terms of IPO companies, right, that turn profitable, okay, the percentage is about 81%. But do you realize that based on this article, right, he actually said that in 2018, okay, so it's a research and they have consolidated it for us, the percentage of IPO succeeding is actually 28%. Okay, so this friend of mine actually went into IPO, and because he went into an instrument like this, think of it this way: what's the possibility of him even succeeding, right? So means every 10 companies that he chooses during this period of time, he's going to what? Succeed 3 times or probably lose 7 times. How does it feel when you are investing your money in such a manner, right? So that's why I really feel that the number one thing that when you start investing, right, is to understand how a company make money. Okay, I even joke about it for a company like this, right? And I want him to even avoid companies that are even reporting negative cash flow or negative operating cash flow. I mean, imagine a friend come to you and say that I want to borrow some money, right? Which is investors' money. Then what will you do as a person? You will really ask him what's the use of the money, right? And then the next question is, how are you going to repay all this money? So likewise, how are companies going to stay profitable if they are on an ongoing basis spending a lot of money, taking a lot of debt, and especially taking your money? So what if in the event they cannot pay the debts, and on top of that they cannot deliver the promises that they have give you, or even the dreams? A lot of companies now are built on pipe dreams, and I really feel that this is a time that I really want to cover this topic. And when I was a trading coach, right, I was charging people a fairly good amount of money. But the issue is, my first conversation with them is always this topic. Okay, if you're going to be learning from me or be guiding by coached by me, right, please don't treat trading or investing like you are sort of like gambling. Because you know why? Because if you really don't know what you are doing, then you are really gambling. And for this case, the IPO, right, the percentage of you winning is 28%. But it will shock you, okay? It will really shock you if you do a quick search, right? Okay, if you go to casino, the percentage of you winning your money, right, is about 44 to 48%. Okay, so I'm going to paste this article over here again. So imagine, okay, why are you putting your money into IPO? It's as good as, it's even worse, the odds are even lower. So in the event of investing or even trading, I really think that at the end of the day, right, it is really looking for not just profits. Okay, ladies and gentlemen, it is also looking for consistent profits, right? How sustainable it is. Because if it's not going to be sustainable, and if you're thinking of you can time the market precisely the right point, I can tell you it's not going to happen. It is not so easy. Even the professionals are finding it difficult. What about you as a retail investor or a retail person or retail consumer in a sense? So I think it's let's be realistic. Okay, let's be real to yourself. Okay, so today, right, I just want to say something. Because a lot of people, when they come to investing, they are always very concerned of like, oh, am I going to lose money? Am I going to lose money? I think the first question, the first answer to you, potentially will. Likewise, you can potentially make money. Okay, and why I will say if you don't take care of this, right, you are more likely to lose money. Okay, I can tell you. Do you think that the stock market is always going to be rational? Not really. The stock market is a combination of action by people like you and me, right? So what do you think? Do you think that our decisions are rational or irrational? So that is why I feel it's my opinion. Most of the time, stock market could potentially be irrational. That is why I want to reduce my risk. When the market is irrational, I want to make rational decision. Okay, so I'm going to share something that you can really understand the stock market, because if you cannot accept this kind of risk, right, then probably the stock market is something not for you. Okay, but again, I tell you, the stock market have made many of people to be very wealthy, not just millionaires but also billionaires. But I'm not saying that you invest in the stock market you will be a billionaire. No, I think if you use the stock market wisely and in a way that the risk is not too high, you can really benefit from it. Okay, I'm a beneficiary of it also. So that's why I feel that really let yourself to understand this. Okay, so I'm going to share this one. The frequency of market correction. So this is based on the article over here. So since 1920, okay, the S&P 500 has on an average recorded a 5% pullback 3 times a year, about 5%. So if the market is just dropping 5%, I think it's normal. Why? Because it's 3 times, right? It's like if you go into this stock market and you don't know what you are risking, and you don't know what you are going to go through, right? Okay, so now I'm sharing you this insights. Okay, if you cannot accept that 5% pullback 3 times a year, don't invest. Okay, don't invest. If not, find someone. Okay, find someone to guide you, find someone to do it for you, either way. Okay, and the next one is 10% correction once every 16 months. Okay, 10%. Okay, these are all facts. Okay, it's ever since 1920, which is 100-year data. Of course, there's a disclaimer here. I'm not asking you that, oh, because you accept then anyhow whack the market. No, that's not what I'm saying. I'm saying that don't go into investment blindly. Okay, I have done so much analysis for my clients and even for myself. So that, because the moment I see all these numbers, I am aware that, okay, 5%, 3 times a year. Okay, I will go okay. So potentially I want to top up. So likewise, 10% once every 16 months. Okay, then 20 plunge every 7 years, according to Fidelity Investment. So this is the data done by them. And they even state the dates. This, remember, is an average. It could be longer, it could be shorter. But for the last 100 years, it's about 43 days. Okay, and by the way, just to let you understand, in 2020, there's a what? Pandemic, right? And it sent the stock market into a bear market movement. Means the market actually dropped more than 20%, which is a bear market condition. But you realize that within 5 months, S&P make a full recovery, and now it is sitting on new highs. Okay, the reason behind it, I'm not going to cover over here, but there is a reason behind it. And if you don't understand it, then obviously have this discussion with me. Okay, because I see too many people get burned because when the market comes down, they are purely irrational, right? They just sell off the position, right? I can even tell you that one of my clients last year, I think he put in about 200,000. So he actually lost about 10%. Okay, but think of it this way: when the market dropped about 30 to 40% and his portfolio is just dropped about 10%, I feel that I outperformed the market. But again, do your due diligence. Okay, I'm not doing any recommendation today, but I'm just sharing with you just facts and insights that have made many people being rewarded by the stock market. Because think of it this way: people that have lost money, they are purely irrational. Okay, they are purely irrational. So I just want you to make decision based on the best knowledge available. Okay, so going to Mike, right? Anyway, long story short, right? In February, I think in January 2021, he actually told me, Alvan, I have recovered, and I said, I know, because I have been watching his portfolio. So what happened is, from negative 20,000, he is actually positive 40 over thousand. And I think in February, before Chinese New Year, he actually sent me a text and said that it's about 50 over thousand. I actually told him about it. And what happens? So means within one entire year, I recovered like 70,000 for him. Okay, sharing this is to tell you that if you really know what you are doing, there is really not much risk. Because risk is when you do not know what you are doing. Get it? Okay, risk is when you do not know what you are doing. Okay, so I'm going to give you the core principle of why, when it comes to investing, you have to think like this. Okay, and this is from, of course, the godfather of investment, someone that we fully respect. So he actually said this, right? If you are not willing to own a stock for a company, we are just not buying shares or stocks. We are owning company. It means I'm holding companies that are making money consistently in the market, and the management team is doing very well. It means they have went through multiple crises and they managed to overcome all of them in a way, and put the company in a better position. Okay, because there are financial indicators, and I mean I covered this in an earlier video, so I'm not going to dive deep into this part. Probably future videos I will do this, but I just want to share these 4 points. So if I'm not willing to own a company for 10 years, right, and don't even think about just holding it for 10 minutes, right? Because you have this dream that the moment you buy is going to shoot up. It's not going to happen. It's not going to happen this way. Okay, so according to Warren Buffett, he said put together a portfolio of companies whose aggregate earnings, right, march upwards over the years. Okay, and also will the portfolio increase also for yourself? Okay, so really, when it comes to companies that you are holding, really understand the business model. Will this business going to last for the next 10 years? Do not look at dreams. And on top of that, right, you need to ask yourself, so this is the final button. Okay, if the company dropped by a 50% portfolio, are you willing to still continue to hold your horses? Okay, I can tell you, even in Warren Buffett's management, in terms of his Berkshire Hathaway, there was ever a year, right, he actually dropped 50% of his company market cap, okay, or his wealth in a sense. It's factual. Okay, if you can comment below, right, and go and research on this, I really want you to research. Go and research on this, right? What he was thinking when his whole portfolio was dropping 50%. What did he do for himself? Okay, so go and do your own work. In all things, manage your risk and really understand risk in all your journey. And at the end of the day, invest wisely and likewise safely. Bye everyone, see you on the next video. And of course, do support me in my journey. Like, share, subscribe my channel and turn on the notification bell. See you soon. Bye bye.